Since the massive liquidation event on October 10th, Bitcoin still hasn't regained its balance. In the midst of this confusion, some claim bull run is over, while others say this is the perfect time to buy the dip. Opinions are flying everywhere. But right now, have you noticed the critical signal emerging on Bitcoin? Today, we're going to break down the key signals that truly matter at this stage, analyze what they mean for the market, and discuss how to navigate this environment with precision. Watch until the end. This breakdown will help you make the right move when it matters most. What's good, y'all? JC here. This crypto market right now feels extremely chaotic, right? After this huge liquidation event, it looked like a rebound was coming. Then last week, we sold off all week. A lot of investors are extremely frustrated. Today, as I said in the intro, I'll walk through the key signals showing up in Bitcoin right now. And at the end, I'll share my game plan and how I'm positioning. And if this topic hits the mark, please hit like and subscribe. I really appreciate the support. And let's get straight to it. Alright, to understand where Bitcoin is heading next, there are three key signals that we need to pay attention to. The first signal is gold breaking to a new all-time high. This is the gold weekly chart, and gold has been pushing to new all-time highs week by week. As many of you are aware already, gold and Bitcoin are the two assets that react most sensitively to global liquidity. Historically, when gold moves first, Bitcoin followed. It's been proven time and time again. However, gold is a safe haven asset while Bitcoin is considered a risk asset. Therefore, if gold's rally is mostly being driven by the risk-off sentiment rather than rising liquidity, it could turn out bearish for Bitcoin. And to verify that, we take a look at liquidity indicators like global M2 and major risk assets like the Nasdaq. And as you can see in this chart, global M2 hasn't rolled over yet, and the Nasdaq is still holding steady. So based on gold's current movement, it's more likely that this rise is being fueled by increasing liquidity, the global M2, meaning Bitcoin could soon follow the same path. The second signal is the spot ETF inflows, and this is one of the indicators that I monitor closely, and it clearly shows that the current situation isn't looking so great. We now have seen 3 consecutive days of net outflows, which is completely opposite of what we saw in early October when Bitcoin was breaking to new highs. And what's more notable is that BlackRock has now recorded 4 straight days of net outflows. Because since the launch of spot ETFs, BlackRock has seen 4 or more consecutive days of net outflows only twice, back in late February and early March. And the Bitcoin price action during that period was of course weak, so we'll need to keep an eye on whether this selling pressure from BlackRock and other ETFs continues in the next week. And the third signal is a daily close below the 200-day moving average on the spot chart. So the 200-day moving average represents Bitcoin's long-term trend, and it is often considered the psychological support line for mid to long-term investors. On Friday, it finally closed below that line and has now stayed under it for 3 consecutive days. Closing below the 200-day moving average is definitely not a good sign, as it signals weakness in momentum. However, a break below this line doesn't necessarily mean that the bull market is completely over. Now let's go over what happened whenever it fell below the 200-day moving average during this cycle. So first, in August 2023, Bitcoin broke below the 200-day moving average, then moved sideways for about 2 months before it resumed this uptrend. And in July 2024, it briefly dropped below the 200-day moving average, but it quickly reclaimed it. But another round of negative news triggered a sharp sell-off. Then the market moved sideways for over 2 months before the next leg up. And in March 2025, after closing below the 200-day moving average, it kept hovering and whipsawing around that level. Then it sold off sharply after the tariff issue, but eventually managed to rebound. The full recovery took roughly a month and a half after the breakdown. Now it has broken below once again, and based on previous patterns, there's a good chance that Bitcoin will continue to consolidate around this area for a while. Now based on these signals, let's talk about my current approach and outlook. The long position I was holding has been closed near break-even, because in futures leverage trading, it's all about risk to reward ratio and placing your bet where the odds are slightly in your favor. But at the moment, neither direction offers offers a clearer edge, so I decided to close my leverage position purely for risk management. And as for taking new longs, I believe it's better to wait until Bitcoin reclaims and stabilizes above the 200-day moving average. So for now, I prefer to stay spot exposure rather than leverage. So when would I look to enter again? I'm watching two key zones. So the first buy zone will be 103 to 101k area. The idea here is that the previous low at 102k might hold, but even if it breaks, the 50-week moving average around 101k currently hopefully provides solid support. And just for your reference, the 50-week moving average has acted as a reliable support level throughout this entire bull run. The second buy zone is the lower boundary of the long-term trend line that started from the 49k low back in August 2024. Both the 49k low and 52k lows from last August and September, as well as the 74k low from April this year, all bounced from this same trend line. So yeah, this seems like a meaningful level to watch. Based on the current price structure, the trend line sits around 96 to 94k, and if Bitcoin falls below it and 90k range breaks, we might have to start considering the possibility that the bull market has ended. Right now, nothing is certain. We'll only know as the market unfolds. If the bull run is truly over and we're entering a downtrend, I will decide whether to hold spot through the drawdown or cut early and re-enter lower. I'll think through that when the time comes and share my plan with you. That said, from a probability standpoint, I still lean slightly towards the bull market continuing. However, my approach remains cautious. I'm not betting aggressively on that outcome. I'm just staying patient and positioning safely. Of course, I want the bull market to resume as much as anyone else, but I'm not here to sell hope or say what people want to hear. I would rather choose to stay grounded, realistic, and focused on objective analysis no matter what the market is doing. This approach is what's kept me alive in this brutal zero-sum market for the past 4 years. To wrap up today's video, in a bull market, gold's rally often signals Bitcoin's next move upwards, but with BlackRock and ETFs showing steady selling pressure, and Bitcoin closing below the 200-day moving average, the overall situation remains uncertain. Therefore, the long position I entered in the previous setup was closed near break-even for risk management. At this stage, I prefer spot exposure or very low leverage over anything above 3x. If the bull trend resumes, I'll consider new leverage entries once Bitcoin reclaims and holds above the 200-day moving average. If price drops further, I'll look to buy around 103 to 101k first with the support of 50-week moving average, and then again near 96 to 94 with the support of this long-term trend line. If the market breaks down even deeper, I'll decide whether to hold newly bought spot through the drawdown or cut early and try to find a place to buy back lower. And for those trading on major exchanges, I highly recommend using BitGet or Bybit. Make sure to check the pinned comment and claim your benefits, because BitGet offers a lifetime deal of 50% fee rebate and Bybit offers a lifetime deal of 20% fee rebate. There's really no reason to miss it, so don't pay full fees to exchanges, because some of my subscribers have already signed up using my code JC777 through the pinned comment and they're enjoying the rewards. Of course, I also get trading fee benefits from the exchange, so it's mutually beneficial. Once you join, the benefits stay with you permanently, so don't miss out. That's it for today, and if you enjoyed today's video, make sure to like and subscribe. Thanks for watching until the end. I'll see you in the next one.